Good afternoon, everyone, and welcome to this exploration of the art and science behind building and scaling successful investment funds in today's ever-evolving market. We've got a great panel lined up for you today. These experts have not only navigated turbulent waters, but thrived by redefining the rules of the game. Just to reintroduce myself, I'm Luisa Baldini, former BBC correspondent and a co-founder of Composure Media. So let me introduce the panel. First, at the end, we have Karim El Sol, co-founder and CEO of Gulf Capital, representing a vision of scaling alternative asset management on a global scale, particularly in the high-growth investment corridors of the Gulf and Asia. We also have Huda Al-Lawati, founder and CEO of Aleph Capital, the first female-founded private equity firm in the Middle East. So a private equity trailblazer, really, whose leadership and regional expertise have set benchmarks in transformative investments. And next to me, we have Peter Hughes, founder of Apex, whose expansive solutions from fund to corporate are integral to the financial backbone of countless organizations. So welcome to all of you. And Karim, to you first, really just wanted to ask, looking back at the biggest obstacles that you found in the early stages of building your fund, how did you overcome them? And more importantly, what would you do differently now?
Thank you. Thrilled to be here. So we founded Gulf Capital 18 years ago. When I came to the region, I used to work in leveraged buyouts and high yield in New York and Europe and London. I came here and there was no private equity industry or private equity firm worth backing. So I said, why not recreate the same concept, the buyout concept that you see in the US and Europe here? So we created Gulf Capital. We raised our capital from 300 shareholders who all rallied behind us to create a regional champion from the Gulf for the Gulf, essentially. So it's very exciting. And obviously, when you start from scratch, you don't have a track record. So how do you raise funds? And that was difficult initially. So we started using our balance sheet to warehouse deals and prove the returns, the amazing returns you can make in this region. Once we built that track record, we started raising a series of funds. We're launching our fourth fund now, which will be 800 million. Our third fund was 750 million. But what I'm very proud of is today, with our track record, we're raising more capital from outside the region than from the region. We're backed by a large number of Asian sovereign wealth funds, European pension funds, American fund of funds, and local sovereign wealth funds who all see the region as a very exciting region to be invested in.
So if you had to pinpoint one thing, what would you do differently today? I mean, obviously the landscape's changed. Is there anything you can pinpoint for anybody out there wanting to start a fund?
We opened recently an office in Singapore in Asia, and we're pushing our companies in Asia. And I think now we're launching a Pan-Asian strategy. And it's a very exciting region, and I wish I opened the office earlier because there's a lot of capital going across Asia, and we can raise more money with a not only Gulf strategy, but a Pan-Asian strategy.
Okay, Karim, thanks very much. Huda, being a startup in fund management is very different to most other startups. What's your advice to anyone wanting to start a fund?
So thank you for having me here. So, I've been doing private equity in the region for 20 years, started in 2004, but my company is relatively new. It's less than 3 years old. And some of the challenges are still there. First-time manager is always challenging because there's no track record. And in the region, there's not a lot of, there hasn't been historically a lot of acceptance of blind pool funds and backing first-time managers. One of the reasons we set up Aleph Capital to invest in the mid-market and the GCC is we saw the gap, but the other one was the sovereigns here are supporting this strategy and this asset class. So I think that has helped us sort of get there and start the fund. And a startup in fund management is not building a widget from your garage. You can't do it. You're responsible for hundreds of millions of dollars of other people's money. And so you need a base level of operating infrastructure, compliance, fund admin, all of these things. ADGM is a great place to do that, but you also need capital, you also need experience and talent to do that, and obviously, ultimately, making good investment decisions, you need a very, very experienced team. So I think the challenges of a startup are common. Everybody has, the startup risks, the having to do everything yourself. But I think when you're managing other people's money, there's such a high bar to start with.
Now, we've talked about this, and I know it doesn't define you, but what advice do you have for women in fund management, firstly? And secondly, you sit on many boards. What piece of advice would you give to future female leaders or future women on boards today?
So the advice I'd give to future leaders of all genders is to work very, very hard. Know your material, your content very, very well, and be prepared to do the hard work, have a thick skin, and struggle a bit, really. And I think that's a little bit generational, but I end up talking about this a lot. It is more challenges. Of course, the female representation in fund management is abysmal, if I can put it that way. And we do see that challenge. I think the institutional investor base, the institutional world is actually very willing to support. It doesn't mean you're going to get money or backing for being a woman. No, you still have to do everything else. And people, naturally, I think not intentionally, I studied behavioral neuroscience in college, and people have natural biases, and naturally people expect a man to be leading, so they sometimes get surprised. They sometimes try to find out who's backing you. I've been asked in meetings, so whose money are you managing, or whose company is it? Multiple times. So there are challenges. I think hard work, great, keep at it, keep at it. That's what I'll tell everyone.
Well, thank you for sharing your thoughts on that. And Peter, getting the optimal structure right for a fund to ensure both operational and also operational resilience and also investor confidence in uncertain markets, that must be a difficult balance.
Yes, I think particularly now when globally it's about the hardest time to raise money. So you can't take shortcuts. You've got to be really thoughtful about where you put your structures, what technology you're using, what reporting you're going to give to investors, what technology you're going to report to investors on. So, for example, if you're thinking about raising money here, you can't do a Cayman fund, right? So you've got to make sure you think about where you're creating your substance and where you're trying to attract the capital from. Otherwise, you're going to fail. It's as simple as that. It's a particularly hard time, and it may not feel like it in this region because this region's where the capital sits. But the rest of the world, you've got to make sure you don't make any mistakes. You tick every box that investors would expect, not just about the structure, but obviously the manager, your materials, and having confidence in the right service providers around you as well. It's actually important to have brand name service providers, fortunately like Apex, that will actually make a difference.
And how do you ensure, Peter, transparency and maintain strong relations with limited partners, especially when markets are volatile?
Well, I think that's key. I remember coming into this region in 2005, and it was a massive bull market, and investors didn't really want to know what the numbers were. They were very happy with what they got. But when it turned in 2006 and 2007, they were wanting to check very carefully that someone independently was giving them the right reporting in the right frequency, so they really understood what was going on in their portfolio. So, there's a bit of trust, but it's the actual verification and independent verification and reporting frequency and quality. People want to get their information at their fingertips. They want it to be on portals. So the actual transparency is critical to the success of both your businesses, I'm sure.
Huda, is that your experience as well? And what strategies have you found have proven most effective for attracting and retaining limited partners in today's competitive environment?
Absolutely agree with everything Peter said. I think having the right infrastructure, we use a lot of one of the key aspects of our thesis is digital transformation for our portfolio companies. And we apply that to ourselves as well. We use a lot of digital tools. We work with Apex. They use a lot of digital tools. I think making it transparent, convenient is very, very important for, to give information, have the exchange with LPs. I also think it's important to not have an us versus them approach internally, from your analysts to your partners, whoever you have. The relationship with your LP base has to be a good one and a strong one, and one that is friendly. You're not trying to position information. You want to give them the true story because, and I would say this, we found our LPs to be extremely supportive. And of course, there are always challenges. There's always learnings. We've leveraged our LPs to learn about sectors we're investing in through their other investments, right? And I think that open relationship has been very, very effective. I think spending that extra dollar on having the right advisors, the right service providers is also important. I don't think it's something, again, going back to the point that you're managing a lot of money, is you should stinge on that those are investments worth making. And LPs see it, they notice it, they appreciate it.
Thank you. And Kareem, I want to talk about investment styles. What's your investment style? How do you rise above the noise? How do you attract yourself to attract global, position yourself to attract global LPs and find your niche?
It's interesting. We perfected a new investment model. We're in the control growth buyout business. We borrowed a page from the West on control and a page from the East on growth. We're obsessed with growth, essentially. So we like to acquire majority stakes in our businesses. We bring our big bench of operating partners, industry advisors. We restructure, we grow our companies. On average, we triple the profitability of our companies before we sell them. But I think having that controlling stakes, as you see in the US in controlled buyouts, is very important to be able to drive the growth, influence the companies, and to be able to exit. We mostly sell to strategic buyers, and the first thing they ask us, you need to sell us a controlling stakes in the business. So we help ourselves when we acquire controlling stakes, essentially.
And can you pinpoint any innovative approaches that you've adopted to really identify and capitalize on alternative investment opportunities?
Well, I noticed the previous panel was on AI. This is something we're using a lot in our portfolio companies. Not as much at the investments level at Gulf Capital, but we're pushing it into our portfolio companies, and it's making a big difference. For example, we own a business in revenue cycle management where we help hospitals, clinics, bill insurance companies, and we are processing 300,000 claims a year. Today, with AI software, we're processing 3 million claims. So we have 3,000 coders in India, but to process 3 million claims, we probably would need 10, 20,000, but we don't, because we're using software and AI. And this company has been using AI for several years, way before OpenAI came to the market and ChatGPT. And we're feeling the benefit, and we quadrupled the profitability of this company because of the growth and efficiency.
And Peter, AI, very hot topic at the moment, not only from Kareem's point of view, but as a trend. Is that a main trend when you look at what are you observing in fund management, and how are you adapting to stay ahead?
Yeah, I think it's a step before AI in terms of what we're doing with servicing. It's the blockchain. It's getting smaller ticket sizes to invest into private markets funds. It's taking private markets funds in a tokenized form. It's being able to distribute into the wealth channels, which was never there before. It's just for institutional investors. But instead of having a minimum subscription size of, say, $1 million locked in for 7 to 10 years, actually, if that's 50,000 and actually you can get it out quarterly, suddenly it's much more attractive to everyone. And I think that's really going to be the transformation we see in certainly private markets investing, and fund creation is in more of a format that appeals to both institutional and also the wealth channels and even retirement channels.
And we only have a couple of minutes left, so Huda, I just want to conclude with you, whether you can share any specific examples of strategies or decisions that have helped your fund weather economic downturns or market disruptions, and any advice for our audience?
So look, I think one positive thing about private equity that it is a longer term asset class. We're not, obviously, we do have to exit, but one of the things that we did when we started the fund is we were very transparent with our LPs about our longer hold periods, 5 to 7 years. The reason is that we're saying we're going to invest in growth opportunities and invest in the J-curve, in technology, in talent to build up these businesses. I think it's a fallacy to say you're going to invest for 3 to 4 years. What a reasonable hold period does is allows you to invest in the business, think long term, and weather the storm because you can ride out cycles. In a region that has a link to a commodity cycle intrinsically as well, that becomes particularly important. The other thing that we do is we are very careful about, and this is a little bit different from what Kareem was saying, is that we think you have to be careful about mixing toolkits. I think LBO and growth, you cannot take a growth opportunity and lever it up completely, for example, right? Because what you're doing is taking away that capital that you want, or that capacity that you want to go into growth to finance your acquisition. And I found, especially in the down cycle, that is a bit challenging for the investments if you go through a downturn. So we're very careful about how we use leverage as well.
Huda, thank you very much indeed. I'd like to thank all three of you for your amazing insights, hopefully absorbed by our audience here. So many thanks, firstly to Huda Al-Lawati, to Karim El Sol, and to Peter Hughes. Thank you very much indeed.
Thank you.
Shukran.